From the financial centers of the world, this is Bloomberg Markets with Alex Steele and Guy Johnson.
It is 10 a.m. in New York, 3 p.m. in London, 30 minutes into the trading day right here in the U.S. From New York, I'm Alex Steele with my co-host for today, Francine Lacroix. Guy Johnson is still off. Francine, the action honestly comes totally from your neck of the woods. I feel like it's European bond yields that are leading the way here.
100%, and the action is back, volatility is back. Now, this is on the back of 2 points, data points. One is the inflation numbers, higher than expected, Alex, so people are now wondering whether it means that we'll see a bit more action from the ECB, whether they'll have to tape quickly. And then the other is, of course, an interview with one of the ECB Governing Council members that points to just that. Now, he wasn't only talking about inflation, but he says, look, at some point, we'll have to get rid of all this pandemic extra monetary stimulus, and we should start talking about it now.
Yeah, the fourth quarter. He wants to see that done. So let's see the market reaction here. So yields over in Europe were also modestly lower on that inflation number. They took another big leg lower after Robert Holtzman talked to Bloomberg. So S&P 500 is down by 0.2%. You also had some data points here in the U.S. Chicago PMI, for example, missing estimates. You have energy, though, and financials leading the way in the green in the S&P. All of that leading to a stronger euro, no surprise, up 0.2%. The dollar broadly weaker in the G10 space. Yields here moved a touch. I mean like a touch, but now we're flat. Does that mean technically we're looking at sort of more of a safe haven bid, lack of central bank divergence? We're going to break that down over the next couple hours. And I did want to highlight crude here, down by 1 percentage point. WTI diverging with other crude like Brent, for example, as Hurricane Ida is going to restart production faster, even though refiners are just not going to be able to turn their lights on. And that's going to create a little bit of a short-term glut. You're seeing that play out in parts of the commodity market, Francine.
Alex, we're just getting some data out of the U.S. Now, consumer confidence actually a little bit lower than expected, 113.8 instead of the 123 that we were expecting. Now, just to put into context, of course, Friday is the all-important jobs report in the U.S., but if we have strong jobs numbers and if we have the labor market holding strong, there will be a lot of focus, of course, on consumer confidence, on the spending side, which is why we need to put a little bit more emphasis on this consumer confidence present situation, but also expectations, both disappointing economists.
Yeah, told you, we're not spending. That's the whole thing. Bloomberg's International Economics and Policy correspondent is going to break this down for us, as well as the data overseas. Michael McKee is looking at that. Hey, Mike.
What do you mean we're not spending?
I
spent something.
We're not.
Yeah, okay, but do you spend as much
Fran,
as
we're blaming Alex,
No.
the whole U.S. economy. We're blaming on Alex, and the
Country.
first chart shows you why. The regional feds tend to put out their regional economic indexes, let us know how things are going in their districts. And as you can see, the four major ones that are out so far, which include New York, Philadelphia, Kansas City, and Dallas, there's only been one trend, and it's down in the most recent quarter. We were worried about consumer sentiment because the Michigan numbers had fallen off and the consumer confidence numbers from the Conference Board had held up, but now they're going the other direction too. Does this mean a pullback in spending? That's a concern. Now, the other thing that happened today that got the markets off on the wrong foot to begin with was China. The Chinese PMIs really surprised. Not only did we see the manufacturing number go down, and you'd kind of expect that because of the lockdown and all the supply chain shortages, but look at what happened to the services index in China. Now, this is their official one, the broader, larger company ones. We get the smaller company, export companies tomorrow, but it went way down. China pulling back. Now, a lot of analysis is this is going to reverse because China seems to have controlled its latest outbreak. We shall see. They may be a canary for the rest of the world's economic coal mines. And finally, I want to show you what you were talking about at the top of the show, and that's European inflation. And it never ceases to surprise me that we talk about how all this stuff is priced in, and we know prices are going to go up, and we know the ECB is going to be talking about it, and then everybody's surprised when it happens. But it's kind of dramatic, the rise in inflation. The headline number goes up to 3%. We haven't seen that since the dawn of the last decade. And so for the ECB, it is a question of, are you contributing to this with the excess that you're putting into the system? Holtzman, of course, is a hawk. So no surprise that he's talking about getting rid of some of that stimulus. But it does mean that the ECB becomes sort of now a talking point in the same way that the Fed has.
I know, Michael, I know we're supposed to know that inflation is rising, but we're expecting economists to get it right. This is the problem. It can rise in line with expectations. Our Michael McKee there with the very latest on inflation and confidence in the U.S. Now, the euro and European bond yields moving off some of these hawkish remarks that Michael was just talking about from the ECB. The Governing Council member, Robert Holtzman, says the central bank should reduce crisis stimulus. Now, in a Bloomberg exclusive, he said, quote, "We are now in a situation where we can think about how to reduce the pandemic special programs. I think that's an assessment we share." Well, joining us now to talk about all of this is Jana Rando, who did the interview with her team. Jana, thank you for joining us. What's concerning markets? The hawk and what he's talking about in terms of getting rid of some of the stimulus, or is it really the inflation numbers coming in this morning?
Hey, good morning. I think it's a little bit of both. Inflation print was certainly a surprise. Policymakers have prepared investors well, saying most of what we see will be temporary. But with the supply problems that we see all over the world, with shortages, with input prices rising, there is actually some concern that those price pressures will feed into inflation, and this might be a little bit of what we're starting to see. Now, investors are focusing on September, on the pace of stimulus in the fourth quarter, especially under the emergency bond buying program. That is now really up for debate, as Mr. Holtzman pointed out. Policymakers are meeting next week for a meeting. They have to settle on the pace to the fourth quarter. And then it's not long until the program is actually set to expire at the end of March. They will also at some point, maybe not next week, but policymakers will at some point have to discuss what's going to happen to bond buying after March.
Jana, thanks very much. Really great reporting. Also, Bloomberg's Jana Rendau joining us there. The other market action here comes from industrial metals. Gating this morning, aluminum futures, they're hitting a decade high. That's right. We're doing commodities on a show that I'm on. Bloomberg M-Line reporter Kriti Gupta is looking at some of the moves here. Kriti, it's not just aluminum, it's other metals as well. Goldman also having a nice upgrade here. Walk us through the price action.
Well, Alex, aluminum hitting a 10-year high just for you, actually, all the way back to 2011. And this is due to a combination of factors, not just the fact that Alex is hosting this show. Don't worry. A lot of it has to do with a seasonal power crunch in general. So that's going to squeeze some of that supply, increase some of that demand, pushing the prices higher anyway. You also have a lot of the story coming from over in China. There is a crackdown on pollution generally, and aluminum is an energy intensive industry in particular. So that crackdown has now made a southwest province in China that actually specializes in aluminum production. They're cutting down on their supply as well. So of course you can see that really show up, and just another reason for prices to grow. But you mentioned commodities broadly, Alex, which is really what I want to go to here. The year-to-date performance of things like oil, of things like industrial metals. Obviously, we know oil has an up 50% year-to-date, but it's crucial. The industrial metals aren't far behind. A 22% rally as we talk about infrastructure spending, as we talk about simply global growth around the world picking back up. So why is this important, especially this week when we're talking about inflation? We'll have to look at CPI data. We compare it to Bloomberg commodity data, and you can see that they track each other fairly closely, which is really why year-to-date, since that March 2020 bottom, it's been really kind of correlated and accelerated. So the question here is, as you start to see commodity prices continue to increase, how much of that is a read-through in inflation, and at what point does it start to worry the Fed?
Kriti, thanks so much. Kriti Gupta. I love, Alex, the way you both pronounce aluminium.
Oh, like my God, no.
I know. Breaking news is going to save us. So Jana Partners, of course, we know who they are. They're an activist investor. They've been getting involved more and more over the last 6 months or so. Just putting out a statement a short while ago calling on Vonage to hire advisors to explore strategic alternatives, including a possible sale of all or parts of the telecom services company. What's interesting, Alex, is that if you look at Vonage shares, they spiked as much as 11%. Now they're back up, gaining 5.9%. Never a great impact on the markets when actually, an investor comes in, says you should break up, and actually their share price soars.
Right. It's definitely about unlocking that value, and clearly there is value to be had. All right, coming up, you got the S&P on track for 7th straight monthly advance as we wrap up August, despite a little bit of softness today. Clinton Warren, JP Morgan Private Bank Investment Specialist, joins us next. This is Bloomberg.
Live from London, I'm Francine Lacqua with Alex Steele in New York. Now, this is Bloomberg Markets. It's the last trading day of August. Where's the summer gone? And the S&P 500 set for its 7th straight monthly gain. Well, Bloomberg's Abigail Doolittle is looking into the bull run. Hi, Abigail.
Hi there, Francine. Well, it really is pretty extraordinary. You were just mentioning that 7th month in a row for the S&P 500. That's the longest monthly winning streak going back to January of 2018. And if we take a look at this board, look at this, a double over the last year. That's really extraordinary. Up more than 100%, straight up, a beautiful uptrend. Some thinking that a correction is coming this fall. But right now, if the S&P 500 on the day, which is down slightly, can turn that around into a gain, it will be the 54th record close of the year. Now, if we take a look at this going back, right now on pace for 53, again, that could change by the end of today. So far on the year, up 21%. So if we take a look at the other number of record closes from January until September, that's the most ever. Back to 1987, though, we also had a big number of record gains between January and September. 47, obviously that was a volatile year. So that brings me to the point of September. September is not necessarily a strong month for stocks, down 0.8%. So Alex, it's going to be interesting to see, will we have volatility in the month ahead? But right now, very strong year.
She got so excited when she talked about volatility. All right, Abigail, thanks very much. Bloomberg's Abigail Doolittle. Joining us now for more, Clinton Warren, JP Morgan Private Bank Global Investment Specialist. He says markets are looking beyond near-term uncertainties, focusing on fundamental strength of the global economy. The PMIs out of China might disagree with you on the strength of the global economy. What's your time frame? What do you see?
Yeah, we see continued growth. I think it's important to take just a few steps back and think of all the events that have happened over the last few days. A horrific attack in Afghanistan that's going to leave that geography in less stable conditions. A powerful storm just barreling into our southern states. We see an increase in cases across the U.S. with the pandemic. School districts, corporations, governments are all trying to figure out what to do and how to juggle this. But despite all that, and despite the weak numbers that you see in China, the markets are still rallying pretty hard. As someone just mentioned, the market has made 50 all-time highs year to date. And when you take a look back and just think why this is, to me, it's a few reasons. One, monetary policy. The Fed remains to keep rates low, which is pushing people into riskier assets. Two, fiscal policy. You have the first infrastructure bill that came, and now the second one, whether it's 1 trillion, 2 trillion, 3 trillion, whatever. I mean, that's going to be more tailwinds to the marketplace. I was listening to a lot of earnings calls the last few weeks. CEOs and CFOs across the board seem to be pretty confident in their pipelines. There's a bunch of cash. Yeah, people aren't spending, but there's Clinton, a ton of cash on the sidelines. Yes.
Yeah. So if you're saying that, I mean, the ton of cash will be here for a long time. What does it take for the markets to correct?
To correct downward, I mean, we think that the cash on the sidelines, whether it's corporations or individuals, will continue to keep this market moving in the upward direction. We look at some of the spending data, and yes, there's some segments of credit card spending that decreased. When we look at the Chase data, that's in leisure and hospitality, but other parts of the spending segments are pretty high. And if you look at cash on corporations' balance sheet, over $2 trillion, it's going to increase spending and investment in their companies, stock buybacks, increase in dividends, et cetera. So we're not really seeing any correction here on the forefront. We're pretty optimistic where the markets can move from here.
So where can you still buy?
Well, I mean, there's a number of areas where you can still buy. And I think what a lot of people are waiting for is some sort of pullback, right? Historically, it's been, when can I have a 10% pullback? I'll get in. When can I have a 5% pullback? We haven't seen a 5% pullback since October. Every 2% pullback, clients are looking to get into the market. So we're focusing in on trends and areas that we think have a long-term sustainable growth. And one of the areas that I like right now is healthcare for what I call the 3 Ds. One, aging demographics. We all know that people are getting older, and as you get older, you spend more on prescription medicine. Two, there's a bunch of deals in this space. So I expect some of that cash that I just spoke about and in terms of corporate balance sheets to be spent on M&A deals. And also there's a lot of innovation in drugs. So whether it's what you saw with Moderna in terms of COVID vaccines or cancer or heart, et cetera, there's a lot of places within the healthcare sector that I think will be good for long-term growth.
But Clinton, where exactly are we in the M&A cycle? I mean, you say that you're expecting a lot of M&A deals. We've seen some 2.5 trillion deals actually since the start of the pandemic. I mean, the figures are enormous. Again, how much more consolidation can we do at this point?
Yeah, I think in certain sectors, you will continue to see a pickup there, whether it's technology or healthcare. The other cash on the balance sheet, like I said, will be used for stock buybacks. You've seen a tremendous amount of buybacks already year to date. We think that will continue to happen, and also an increase in dividends. And also, companies are going to reinvest in their businesses and their people. You're seeing it across the board. Listen to the earnings call these last few weeks. It seems like that's here to stay.
So does that mean that it seems like what you're saying, the Delta variant, any kind of a Fed taper, that we can kind of digest all of that? What about any sort of political risk from D.C.? I know you mentioned all the stimulus coming, but the price tag will come due, and it feels like higher taxes at some point are going to come down. Is that a material headwind for some earnings here?
I think it's definitely a risk, not only for earnings, but also for consumer sentiment. Some of the numbers you see in terms of increased tax rates for capital gains or income taxes will definitely slow down consumer sentiment, and also which could potentially slow down corporate earnings. So that is something that we're going to have to deal with, and it is a risk on the horizon. But that being said, there's some things that offset that. So the spending, infrastructure, whether it's human infrastructure or hard infrastructure, that will be a stimulus, that will be a catalyst, that will be a tailwind to the marketplace. So yes, it will be offset by some of the tax increases, which will pain some consumers and consumer sentiment and money in their pocket. But net, we think it will be a benefit to the overall economy.
Clinton, thank you so much. Clinton Warren there of JP Morgan Private Bank. Now, coming up, we talk more about the markets. Also, the big Apple. Apple surpasses a market cap of $2.5 trillion. That's more than the GDP of Italy. More with an analyst who's bullish on Apple. Well, then Ives of Wedbush joins us next. This is Bloomberg. Well, Apple kicked off the week with plans to add satellite capabilities to iPhones for emergency situations. This comes after the tech giant surpassed a market cap of $2.5 trillion. Well, joining us now is Dan Ives, Wedbush Securities Senior Equity Analyst. He has an outperform rating for Apple with a price target of 185. Thank you so much, Dan, for joining us. When you look at Apple, in the satellite features, are they only going to be used for emergencies, or could it actually expand its reach significantly?
Yeah, I think for now it's going to be emergencies. And this is something Apple, they've been working on within Cupertino for the last 3 to 4 years. But I think in future iterations, of the iPhone, you could see this expanded. But I think what it does, along with some of the chip advancements that they made, it just shows the technology innovation that's going on within Cupertino. And it's been one of the keys to success in terms of the last few years.
Dan, $2.5 trillion market cap. What's going to be the next big catalyst for Apple?
Yeah, look, we believe this is, when I look out the next 6-9 months, this will be a $3 trillion market cap. And, to your question, I think it's really about this elongated super cycle. In terms of iPhone 13, which we expect to launch third week in September, we think that's up double digits from iPhone 12. Because of the massive pent-up demand that's happened, the street continues to underestimate it. You combine that with the services business, which we think is worth about $1.4 trillion, gets us to a $3 trillion market cap for Apple. And I think, many have sort of said innovations in the rearview mirror. I think to the contrary, a massive renaissance of growth going on in Cupertino.
I mean, I love the renaissance of growth idea, but Dan, don't regulators kind of sit up and take notice?
Yeah, I mean, look, no doubt you see what's happening in Korea, and also across the Beltway in Brussels. And you're going to see regulatory spotlight on big tech. It's not going away. And Apple's front and center, especially on the App Store. But I think from an investor perspective right now, it's the lack of consensus that continues to view this as sort of more fines rather than regulatory changes that could be business model changes. And when you look at Apple, it's really about that App Store, that 30% fee. That's the crown jewel within Apple. And I think you could see some pressure on that over time. But for right now, investors are sort of viewing this as a contained risk with a green light to own not just Apple, but broader tech, given our view of 16.5 NASDAQ in terms of year end.
Okay, so what about Google, or I should say Alphabet, touching an all-time high yesterday? We're looking at the stock potentially up for 8 straight monthly advance. You got that recovery in digital ads. This is a huge move. Same kind of question, what kind of upside is there? And I'm wondering, like, where are the laggards of these big tech guys that can really see some more upside?
Yeah, I mean, you've just seen just a tidal wave of growth in terms of what we've seen on digital advertising. And I think for Alphabet and Google, I think the other thing too is what's happening on cloud. GCP, in terms of Google's cloud initiative, really starting to gain more and more traction as part of this $1 trillion cloud opportunity, a bit of a re-rating on the stock. But I think when you look at what's happened in terms of broader tech, look, there's names like an IBM that has not participated at seeing a renaissance of, growth on cloud. And to me, the best opportunity continues to be cybersecurity. I think we are just seeing, unlike anything I've seen in terms of the growth over the last 20 years, names like Zscaler, CyberArk, Tenable, Telos is the federal opportunity. I think cybersecurity is going to be a significant outperformer the rest of the year.
Dan, is there a common theme for all of these, stocks that makes a difference between the companies that actually give out data or, scour your messages or scours your photos, even if it's for, doing good like Apple is suggesting it would, and the ones that don't do that?
Yeah, look, right now it's a balancing act between privacy as well as what we're seeing on just in terms of shifts to the cloud. But right now, what I really want to be playing, what we've been telling investors, is just this digital transformation that we're seeing across consumer and enterprise. So, of course, on the broader shift to cloud, we view this as a $2 trillion market opportunity over the next decade. And what's also happening now is that investors that were playing Chinese tech names, they're all rotating to U.S. tech stocks, just given the scale and scope of the crackdown in Beijing. That's just been another tailwind for U.S. tech stocks.
Real quick, Dan, before we let you go, if we have some kind of taper tantrum, higher yields, does that affect the thesis?
I think those are just opportunities. That's been our thesis for the last 2 years. We're in the middle innings of a bull cycle for tech. Anything happen, you continue to own the Microsofts, the Apples, the FANG name, cybersecurity.
All right, Dan, thanks a lot. Really appreciate it. Dan Ives of Wedbush Securities. Thank you very much. Francine, this is like my ultimate question, like, when do I buy my next iPhone? I've heard the super cycle thesis for a long time and lots of years, and I'm wondering, like, when that's going to hugely kick in at this point.
Yeah, I mean, when do you not buy? I think if you're a believer actually in Apple products is probably the question that a lot of people would ask.
True. It did take me a really long time to upgrade from the, what did I have? The XR, the 10? Or was it the 8? I don't know. It was a really small phone.
I'm all about the portrait mode.
Okay, nice. True.
They had me on the
6, the iPhone 6, that's right. Coming up, the Taliban calling for good relations with the U.S. This comes just hours after the final American soldiers flew out of Afghanistan after 20 years of presence. We're going to talk to retired Brigadier General Mark Kimmett. This is Bloomberg.
Now, U.S. military flights have ended, and our troops have departed Afghanistan. A new chapter of America's engagement with Afghanistan has begun. It's one in which we will lead with our diplomacy. The military mission is over. A new diplomatic mission has begun.
That was Antony Blinken, U.S. Secretary of State, signposting a new chapter of U.S. engagement with Afghanistan. In the meantime, the Taliban is celebrating in Kabul with the departure of the last American troops, cementing their return to power 20 years after the U.S. ousted them. Here with the latest, Bloomberg's Washington correspondent Emery Hordern. Emery, we're going to hear from President Biden later on today. There's still some Americans in Afghanistan. What can we hear?
Yeah, a few hundred Americans yesterday. Secretary of State Antony Blinken said probably closer to 100, but really this is now about the diplomatic effort. As you heard there from Secretary Blinken, U.S. military flights have left, but what happens for those Americans that are left behind, as well as thousands of Afghans that are just desperate to get out of the country? There is no diplomatic presence left, an American presence left in Kabul. So now everything has to be done through Doha, and now it's all about how do you secure the airport, how do you make the airport operational so that if military flights are not there, we know that is very clear, civilian flights to make sure that these individuals can get out safely. And I imagine the president in his remarks, which are actually pushed back into the 2 o'clock hour, this is what he is going to focus on, the next part of this mission.
Anne-Marie, thank you so much. Anne-Marie Hordern there in D.C. Now, let's also get perspective from General Mark Kimmett. He's a retired brigadier general and former Assistant Secretary of State for Political Military Affairs. General, thank you for joining us. How are the Taliban different to 20 years ago?
Well, I don't think they are. There seems to be this charm offensive going on, somehow believing that the Taliban are more secular, more open to an inclusive government, less radical than they used to be. But everything that I've seen since the February 2020 agreement in Doha indicates to me that there have been no changes except for this gloss they are putting over as they talk to the international community.
General, where does that leave our counterintelligence then within Afghanistan?
Well, the counterintelligence and the intelligence on the ground is going to suffer tremendously, both from our assets on the ground as well as the assets that we had through the Afghan government and the military. I think we're going to have to depend more on technical means such as overhead imagery, satellite imagery, but that certainly is not a replacement from human intelligence that we were getting.
General, what can you tell us about the relationship between the Taliban and ISIS-K? Are they actually sworn enemies, or could they come together to fight against the U.S. and allies?
Well, I think people need to recognize that ISIS-K came out of the Taliban. They believed that the Taliban were not as radical and as deadly as they needed to be. So this is an offshoot of the Taliban. Now, there's a very pejorative term which goes, you can't buy an Afghan, but you can rent an Afghan. And I would expect to see both of those groups coming together, as well as bringing in other radical groups and other terrorist groups from around the world, so that we're going to see Afghanistan potentially and probably return to its pre-9/11 position as a safe haven and sanctuary for terrorism.
Why would the Taliban, in essence, want that? Because all that's going to do is create more violence and danger and lack of security within Afghanistan. You would think that they'd want something different this time.
Yeah, and whether it's a lack of capability or a lack of willingness, that may not make a difference. Nobody believes that the Taliban are willing to evict them, so to speak, nor do they have the assets to have everybody where they need to be to prevent that from happening.
Should we worry about Al-Qaeda, and could we see a lot more terrorism actually in the West because of that?
Whether it's Al-Qaeda, whether it's ISIS and its significant number of branches, whether it's groups such as the Islamic Movement of Uzbekistan, there are no lack of terrorist groups around the world that are operating, some estimates, 40 to 45 countries now. But our activities have been primarily to work with local governments to ensure that those terrorist groups inside those countries are mitigated to where they can't have an international response capability. I don't think we're hoping that that will happen in Afghanistan. My personal view is we won't be able to do that.
So then, to that point, what do Western countries then need to do if not only the U.S. reputation is somewhat damaged, particularly with how it was handled in relation to Europe? So, like, what's left?
Well, what's left is a tough counterterrorism campaign at this point through drones, overhead aircraft, and intelligence, and as needed, particularly with the hostages that remain behind, perhaps some over-the-horizon operations on the ground to extract these people. Look, whether our reputation is damaged or not, the fact is that a significant number of Western countries have a vested interest in preventing terrorism from coming to their countries. So I don't think it's going to be difficult to build a coalition to support that counterterrorism campaign.
Okay, but given the damage that we've seen on the civilian population because of the U.S. drone strike in Kabul, are drones reliable?
Well, they're a blunt instrument, to be sure, and that's the difference between having people on the ground that can direct those strikes with eyeballs and drone strikes that are done through overhead imagery. They are blunt, they are less accurate in terms of their ability to discriminate civilian targets and collateral damage, and that's the cost of us leaving.
Can we get those 100 to 200 people out, Americans out, without troops on the ground, realistically?
Look, I think the short answer is some don't want to leave, but those that do want to leave, I would refer and have your viewers remember what it was like and how difficult it was to do an over-the-horizon operation into a friendly country, Pakistan, to go after bin Laden. And if you look at the difficulties involved in that type of operation, you can only imagine how difficult it will be to extract people from the ground inside of Afghanistan, particularly if the Taliban is not seen to be a friendly government or having good relationships with us.
All right, we definitely watch all of that with caution. Retired Brigadier General Mark Kimmett, thank you very much for the insight. The market continues to kind of take Afghanistan in stride, but it's definitely one to keep your eye on. Okay, coming up, you've got a CDC panel of experts remain uncertain about the need for a third COVID vaccine shot. We're going to break that down with Dr. Peter Hotez, Dean of the National School of Tropical Medicine at Baylor College of Medicine. Next, this is Bloomberg.
This is Bloomberg Market Summaries, and you're looking at a live shot of the principal room. Coming up, Paul Browning, the Mitsubishi Power America's president and CEO. That's at 11:30 a.m. in New York, 4:30 p.m. in London. This is Bloomberg.
Some breaking news in an interview with Bloomberg News. Klaas Knot, another ECB Governing Council member, saying that the Eurozone inflation outlook, Alex, may have improved markedly enough to actually start justifying an immediate slowdown in ECB stimulus. Now, this, of course, echoes what we heard from the Austrian Central Bank governor, also a Governing Council member of the ECB. Again, we had some inflation figure this morning, higher than economists had expected. The first interview moved bonds a little bit, as maybe it's taken the market a little bit by surprise. There does seem to, have changed in the last 2 weeks, that maybe it's not that too much stimulus is ineffective, is that at some point it could also be harmful.
Yeah, and what I find interesting also is that both of them talked about the fact that they shouldn't necessarily apply PEP rules to app rules. So this is the Pandemic Emergency Purchase Program, had more flexibility in how much they could buy and how and where on the spectrum of good or bad debt could they buy. The idea is that they'd apply that to their traditional asset purchase program. That from Holtzman to Knot, that seems kind of off the table. They're saying, no, we don't want to do that because there's some real issues with that kind of flexibility. That is surprising to me, considering that we don't yet know how we're going to come out of the pandemic.
Yeah, it is, but I think, there's a faction of the ECB Governing Council that's hawkish, that's worried about inflation, that has always said, extraordinary measures are that, they're extraordinary, and we want to make sure that we remove them as soon as possible.
Yeah, I also think it's quite interesting as well, because how much stock do we put into this? Like, this is Bullard? Can we equate this to Jim Bullard here in the U.S., who every time he comes out, he's just like super hawkish, and eventually the market becomes immune to it? Or is this a bit different? I don't generally know.
No, I think I would also say even a little bit more hawkish, actually, just because of, the muscle memory coming from Germany, Austria, and the Netherlands of inflation in the 70s and 80s. So more hawkish. To the hawkish side of Bullard is probably how I would place him.
And I also just point out, too, that we're definitely seeing some kind of a taper tantrum within Europe, within that bond market, because that's clearly not yet priced in, with BTPs up by 7 basis points. All right, let's get back to the virus here. The CDC panel of experts remains guarded on the need for that third dose of COVID shots. In the meantime, a study found the Moderna vaccine makes more than double the antibodies than the Pfizer shot. Let's discuss with Bloomberg's healthcare reporter, Robert Langreth. When are we going to get some clarity on that booster? The Biden administration wants it by September 20th.
So on the boosters, we don't know yet. They're going to meet again. The discussion yesterday was, fairly tentative, and they wanted more data at the CDC ACIP meeting yesterday. But they're going to meet again in September, and then presumably a lot more data then. In the meantime, researchers with this study are beginning to look at subtle differences between the vaccines, and they did in this kind of one preliminary study out of Belgium looking at 1,600 patients. They found, a somewhat higher, the Moderna vaccine produced a somewhat higher level of antibodies against the spike protein. And that's intriguing, but, what's more important is levels of clinical protection. That's still holding up, against protection against severe disease, still holding up well with both vaccines. But it is possible, if there's subtle difference in antibody levels due to the doses of the vaccine, it is possible that could lead to, differences in mild breakthrough infections over time. But that all has to be looked at much more carefully before we make any firm conclusions.
Robert, thanks so much. Robert Landgraf there with the very latest on COVID and vaccines. Now, for more on this topic, let's bring in Dr. Peter Hotez, Dean of the National School of Tropical Medicine at Baylor College of Medicine. He's also co-director of the Center for Vaccine Development at Texas Children's Hospital. Thank you, Doctor, for joining us. First of all, do I need antibodies once I'm vaccinated or once I catch COVID to protect myself from future infections, or is there another way for the body to actually protect me?
Well, certainly a type of antibody known as virus neutralizing antibody is extremely important, especially in the immediate aftermath of getting vaccinated. And there seems to be, it's not a true correlate of protection, but it seems to be associated with it. So virus neutralizing antibodies are important. But there are also other arms of the immune response in terms of T cells, and that's why looking at virus neutralizing antibody alone is often not sufficient. So, for instance, the announcement that Moderna may have a higher virus neutralizing antibody by 2 or 3-fold, I don't take too much. I don't think too much about that, because that's still a very modest difference. And remember now, Tony Fauci presented data last week showing that after your third immunization with the Pfizer-BioNTech, the amount of antibody went up 30 to 40-fold. So just to keep those numbers in perspective.
So how quickly do you think we do realistically get a booster shot? And how quickly do you think we actually need a booster shot?
Well, it's clear from the data from Israel and some data in the U.S. that protection is waning, and there is a decline from over 90% down to 40 to 50% protection against infection. The question is that sufficient to warrant doing a booster, or do we need to see high rates of breakthrough hospitalizations? And the scientific community is going back and forth on that. Many feel, look, even if you're getting high rates of breakthrough infection, that's a concern because of long COVID and who wants to get long COVID. And potentially you'll get more durable protection. You know, when these vaccines were released in the United States, with a 3 to 4 week interval between the first and second dose, many of us looked at that and said, you know, that's not what the kind of schedule you would do to give long-lasting durable protection. Usually give a much longer interval, and that's what the booster would do. At that time, we had to do it within 3 to 4 weeks in order to we were in an emergency situation with healthcare providers, nursing home residents, so it made sense to do it. But in a sense, after you did that, you kind of bought yourself a 3-dose vaccine at that point.
Mm. What is the trial that actually you're waiting to know more about, Dr. Hotez? It seems that a lot of the trials sometimes are misleading. We don't exactly know, what kind of data we're looking at. Is there a trial that will put us to rest on whether some of these vaccines actually work against variants?
Well, there's a few things in that. First of all, in terms of waning immunity, it may not necessarily be a clinical trial so much as looking to see if there's high rates of breakthrough hospitalization data now in the U.S. One of the problems is the Centers for Disease Control just doesn't put it up there in a straightforward way. We should know every major medical center in the country right now what percentage of those hospitalized patients are unvaccinated versus vaccinated. We know that the vast majority are, of course, are unvaccinated, but are we talking 0.1%, 1%, 10%, 20%? And we're getting numbers all over the place. So getting clarity on that, I think, would be extremely important. Israel has now put up data showing that after the third immunization, it does seem to restore some of the protection against actual infection, which is important, but it's still, we're just getting drips and drabs of data, not really a good body of evidence that we can look at.
Doctor, we've seen some travel restrictions come back into place. The EU putting more restrictions on U.S. travelers. You also had U.S. Elevating Germany to level 3, which means be careful if you travel there. Does the science support that? I mean, if we're all dealing with Delta and we're all dealing with more vaccinations, does the science support that kind of restriction?
Well, the European restriction was for unvaccinated U.S. travelers, and I think you're going to see that increase. More and more countries are going to be insisting that anybody entering the country gets vaccinated, and there is precedent for that for yellow fever vaccine and others for some countries, and that may be what drives a lot of the vaccination rates. Overall, travel restrictions, I'm not a big fan of. Remember all of the bluster that went into travel restrictions from China at the beginning of the pandemic in the U.S. in 2020. And then, of course, the virus entered New York from Southern Europe, and that's what ignited our first big wave. So I don't think we're in a good position to really understand the impact of travel restrictions. So overall, I'm not in favor, but restricting travel from unvaccinated individuals may make some
Doctor,
sense.
should young children be vaccinated?
Certainly we're seeing a lot of breakthrough hospitalizations right now among young people in the United States, and that's accounting for a big share of our fourth wave. Young adults who are unvaccinated, teenagers who are vaccinated, even some younger kids as well. So I think we will head towards there. How quickly we can get that information in order to warrant moving forward for safety and efficacy in order to immunize young kids, I don't see that happening till later in the fall.
All right, Doctor, thanks. We really appreciate your time today. Dr. Peter Hotez of the Baylor College of Medicine, thank you very much. Coming up, the Zoom swoon, the video conferencing provider sliding a sales forecast falling short of estimates. More on that next. This is Bloomberg.
It's time for the Bloomberg Business Flash to look at some of the biggest business stories in the news right now. I'm Rishka Gupta. Once again, U.S. home prices have jumped the most in 30 years. The S&P CoreLogic Case-Shiller Index of property values nationwide rose 18.6% in June from a year earlier. It was the 13th month in a row that prices have increased. June's rise was the largest in data going back to 1988. Price hikes were driven by low mortgage rates and a tight inventory. The retail shakeout in the U.S. has slowed down. That's according to a new report from advisory firm BDO USA. There were fewer bankruptcy filings and store closings in the first half of 2021 compared to the last 2 years. The pandemic's mass closings accelerated what had already been a years-long retail downsizing, but BDO says that 2021, well, it may be the first time in years that store openings outpace the closings. And Delta Airlines is seeing that the threat of fines in prompting workers to get vaccinated. Delta says there was about a 5-fold increase in its workers getting vaccinations after the airline said it would impose a $200 monthly surcharge on unvaccinated employees. Delta was one of the first major corporations to take such a step. And that is your latest Business Flash. Francine?
Thank you so much, Ritika. Now stay at home, darling. Zoom Media, Zoom Communications passed $1 billion in quarterly revenue, but a mediocre outlook actually sent shares to their worst day since November. Bloomberg's Dave Wilson is here with a look. Dave, are we all like zoomed out, Zoom fatigued post-pandemic?
Well, there's a certain amount of that. And you have to remember, too, this is a company that has grown at a meteoric pace. So, you looked at their fiscal second quarter, you saw that earnings and sales beat analyst average estimates in the Bloomberg survey, but they were the smallest beats since the company went public back in April 2019. And revenue, 54% growth would be great for a whole lot of companies, but this is, Zoom, a relatively small number when you consider the past 5 quarters you were at 169% or higher. So, it kind of pales by comparison. And stock performance, you can say the same thing about. I mean, this is a company that rose almost 5-fold last year. It's kind of swung between gains and losses this year, now with a bigger loss than it had. I mean, given the reception to its outlook as much as anything, it's, not so much even the quarterly results, is that they weren't, anticipating that they were going to do a whole lot better than analysts were anticipating. So you look at the high end of revenue estimates, that's what that $4.8 billion figure represents. And Zoom didn't get there. I mean, same thing with earnings when they're talking about, $4.79 tops, and that's the highest estimate. Similar story with the share prices. We've seen projections from analysts, the average at least, the ones we surveyed here at Bloomberg, come down 8% this week in the wake of the results. And Zoom shares are down a whole lot more than that in today's trading, almost double.
Dave, real quick, some of the other kind of stay-at-home darlings, have they had the same kind of shift as Zoom has?
I mean, to some extent, you can say that. You take a company like Peloton Interactive, the exercise bike maker has had its challenges.
Oh, true.
But Zoom, given the extent of the move up, that we had seen, especially last year, really kind of taking it a bit more than some of its peers.
No, fair point, fair point. All right, Dave, thanks a lot. Bloomberg's Dave Wilson joining us there. We're going to hear from Kelly Steckelberg, Zoom CFO, later on today, so definitely don't miss that. 5 p.m. in New York, at 2 p.m. in San Francisco. Francine, one popular stay-at-home stock was DocuSign. I cannot live without DocuSign. Do you guys have this over there where you can sign all major documents with your finger? And I'm like, oh my God, it's a game changer.
I mean, it's very popular with lawyers. I'm a Evernote person. This is what I use. I guess it's the new technologies. Like DocuSign is something good. I don't find it that sexy, I have to say, Alex.
Oh, okay. I was really excited about it. But the point being is that a DocuSign can still be that stay-at-home stock, but still do well, I guess. Anyway, coming up on the European close, lots of news concerning the ECB and their PEP program. We'll talk to Chris Watling, Longview Economics CEO, joining us next as inflation moves higher. This is Bloomberg.